Okay, it's showing now. Yeah, it's working. Okay, so sorry guys once again. So everyone who's not here, welcome guys. This will be an educational video, an educational webinar where I will break down a topic for you, and after the breakdown I will create a forecast for the upcoming days too. So the usual stuff, but the only different thing is that I'm going to create an educational webinar. We used to do this like a year ago. We used to have educational webinar on every single week, so I'm bringing it back. So yeah, I said that I will break down the difference between the order flow and between the trend, because this is a really crucial topic, because some of you guys still get lost in the trend order flow, don't really know that where should you shift your trade direction, where should you look for longs, where should you look for shorts, what should you force, what should you trade. And yeah, this is a really crucial topic, so I have to create an educational video about this. So yeah, after this video, you will be able to know that when should you look for short trades, when should you look for example, long trades, where are you looking for reversals, where are you looking for cancellations, and what's the direction that you want to trade in the market. So yeah, this will be a really needed video. And as I said in the previous recording, some of you guys already know about this topic, because some of you guys bought a one-on-one from me and you asked for this topic. So technically everyone who bought the one-on-one session from me asked for this topic to break down. And yeah, I'm going to do the exact same breakdown that I did in the one-on-one sessions, because it's really clear, really easy, and really understandable. So yeah, let's just start this breakdown. And first of all, here we are. I'm going to explain everything on these charts. Okay, so here we are. What is a trend? What is an order flow? The trend can be seen here. So our trend is being identified on the 4-hour chart. Just memorize this, just write it down, that the trend is being identified on the 4-hour chart, and only on the 4-hour chart, not on the 1-minute chart, not on the 15-minute chart, not on the daily, not on the weekly. Our trend is being identified on the 4-hour chart only. So if you see the 4-hour chart, take a look at the 4-hour chart, search for the trend, identify the trend, and that will be your trend. That is what we call a trend. Okay, what is an order flow? Order flow can be found on every single time frame. Order flow can be found on every single time frame, starting from the daily. On the 4-hour, there's order flow too. On the 15-minute, 5-minute, 1-minute, every single time frame contains order flow. But the reason we are calling the 4-hour is the trend time frame is because that's our highest time frame that we are trading based off of, right? Of course we use the daily, of course we use the weekly too, but those are just indicators for the direction of the market. We are using the 4-hour chart for actual trading purposes, and not just for directional purposes. So our highest time frame decides the trend, and our highest time frame is the 4-hour time frame. Okay, but every time frame besides the 4-hour, and of course the 4-hour has its own order flow too, but technically the 4-hour order flow is the 4-hour trend. So every time frame has its order flow. What is the order flow? Order flow is basically says it for itself, right? So order flow is where the orders are flowing. It's basically the trend, just in smaller directions. So order flow can be bullish, can be bearish, can be bullish again, can shift to bearish again. So this is how the order flow looks like. Order flow will shift back and forth every hour, every minute, depends on the time frame, of course. So what do you see in the 1-minute chart? The 1-minute chart doesn't really have a clear trend, right? So 1 minute can move to the downside, can change the character here to the upside, can start to move up, can change the character to the downside, can change back up the character, can change back down the character. So the 1-minute time frame doesn't really have a trend. This is what we call order flow. The 5-minute does the same, 15-minute does the same, so it changes back and forth. But the trend is being identified on the 4-hour trend. So on the 4-hour chart, you will see a massive trend, right? So on the 4-hour, for example, if you take a look at this chart, you will see that the trend on the 4-hour chart is bearish. It keeps breaking structure to the downside over and over again, keeps reacting on supply areas, keeps reacting on extreme supply areas, and keeps breaking the structure over and over again, right? There could be demand reactions, there could be a demand reaction, there could be a demand reaction, there could be a demand reaction, but the trend remains the same. The trend remains bearish because price keeps breaking structure to the downside, keeps reacting on extremes. Okay, so here comes in place the decisional area. So, there could be decisional area on the 4-hour chart. There could be lots of decisional areas. So technically there could be a decisional area, there could be another decisional area, but here's the extreme on the upside. Just like I marked it here, that here's a decisional area and here's the extreme, here's the high point. Just because the 4-hour changes the less recent decisional area, takes out the less recent 4-hour decisional area, that won't change the overall higher time frame trend. That won't change that won't change the trend, right? So the trend is still being determined by the 4-hour chart. Just because price breaks above decisional area right here, it won't change the trend. The trend will still remain bearish. Okay, so the 4-hour trend will still remain bearish just because this supply break, decisional 4-hour supply break happens here. The trend remains bearish. The trend will only change if price takes out the less recent extreme area on the 4-hour chart. So technically takes out the less recent structural high point. This is not a structural high point. This is only decisional supply area. Structural high point can be found here. So if price takes out the structural high point, then the trend will shift. If the trend shifts, then it will mean that the trend changed from bearish to bullish. And this is the only place where the trend can shift on the 4-hour, right? So as I said, trend is being determined by the 4-hour chart. So this was one of your confusions, guys, that when do the 4-hour trend change? When is it bullish? When is it bearish? It breaks every zone on every day, right? So when will the trend really change? When the extreme area is getting taken out. So if the 4-hour is getting flipped, getting broken, then it won't change the trend. The trend will still remain bearish. I will explain this on the 15-minute chart better. So actually the further explanation will happen here on the 15-minute chart, on the 15-minute example. I'm just talking a little bit about this 4-hour example. So it won't change the trend of the 4-hour. It doesn't mean that it won't change the order flow. Here comes the difference. Here comes the difference, right? Between the order flow and between the trend. It won't change the trend. It won't change the 4-hour trend that price takes out the decisional 4-hour area. But the order flow will be changed. The order flow will be looking like completely differently, right? So mainly we identify the order flow, or we care about the 15-minute order flow the most. So every time frame has its own order flow: 1 minute, 5 minute, 15-minute, 4-hour. Every time frame has its own order flow, but we care about the 15-minute order flow the most. That's what we really care about. That's what determines what we are trading. So 4-hour is the indicator for the trend. 15-minute will be the indicator for the order flow. So we will use the 4-hour for the trend. We will use the 15-minute for the order flow. And we will stick to this. But, I already broke it down. Like half a year ago or a year ago. I mean, this topic, but it requires a further breakdown because you still don't really get it, that how to shift between the order flow and trend. So that's why I'm creating this video. That's why I'm creating this breakdown. So once again, trend, 4-hour, order flow, 15-minute. So as I said, if this decision is getting broken, then it won't mean that the trend changes. Trend will shift right here on this high line, but the order flow will shift down here on the 15-minute chart, right? Still get the connection? Trend 4-hour, order flow 15-minute. So let's just take a look at this example. This is this blue line is a 4-hour movement, right? So this blue line is one 4-hour movement. Looks like this on the 15-minute chart. So let's just switch to this 15-minute example. Let me just bring it a little bit closer so you can see it better. So here we are. Okay, 15-minute example. This is the 15-minute order flow. 15-minute order flow is bearish, right? It's clearly bearish, printing bearish order flow. Orders are following each other's breaking structures to the downside over and over and over and over again. Can't create any high shift, can't create any change of character, can shift the order flow. So the order flow is clearly bearish, right? I have a question for you guys. Price mitigated the 4-hour zone. When will the order flow shift to bullish from bearish? When will this bearish order flow shift? This is my first question in this session. After 15-minute change of character, 15-minute change of character. Exactly. Thank you, guys. Exactly. That's when the order flow shifts, right? If this high is getting broken, then the order flow on the 15-minute chart will shift to bullish from bearish. Here comes the next question. This order flow shift changes the trend. Will the trend change by this order flow shift? Will the 4-hour trend change by this 15-minute order flow shift? No. Yeah, exactly. It won't change. Trend remains bearish. The trend is still bearish. On the 4-hour, this movement, so let's just imagine that price created a change of character here to the upside. Here will be a change of character, okay? And we call this as a, no, I will use this tool right here. So this will be a change of character to the upside, right? Here's a change of character. This movement will look something like this on the 4-hour. Just look at this. This won't change the trend. The trend will still remain bearish. We are still on the bearish side of the market. We are still forcing bearish trades over bullish trades. We are prioritizing bearish trades. But of course, on the 4-hour chart. But how can we connect this with the 15-minute chart? Since the 15-minute chart just changed the character. So how can we prioritize shorts over longs if the 15-minute just changed character? Why are we prioritizing still shorts over longs if the 15-minute is bullish? Because the higher time frame, the trend is still bearish. And if the higher time frame trend is bearish, you want to prioritize shorts over longs if a valuable supply tap happens. So how can you actually make this work? So let's just imagine that this 15-minute change of character, 15-minute order flow shift happens here. Price leaves a valuable demand behind, right? So there will be a 15-minute demand area somewhere around here. Price coming down creates a fractal confirmation, 1-minute change of character, or even a strong change of character. Okay, fractally confirmed time frames, 15-minute bullish, 1-minute bullish. You're going to take a long here, right? This is a nice opportunity, not the best opportunity since the trend is bearish and you're taking a bullish trade, but this is a good opportunity with high criteria, for example. So what will be your next target point? Why am I saying that you are prioritizing shorts over bull trades? Your next target point will always be the next 15-minute supply area or a liquid region. For example, if you can find double taps right here, you will target those double taps. Or if you are more confident about your trade, you're going to target this next recent 15-minute supply area. And the reason you're targeting this 15-minute supply area right here is because, as I said, you're prioritizing shorts over longs. And if you're prioritizing shorts over longs, you're going to expect a reversal and a change of character confirmation entry on every supply, on every higher time frame supply, right? So I just imagine the price is coming up to this supply, mitigates this supply, the next recent 15-minute supply, right? Mitigates this supply and creates a change of character. You're taking your long TP right here, you're TPing out your trade here, you booked a nice amount of profit, for example, 10 risk-reward ratio, pretty nice, you're satisfied with it, you just made a nice profit, but you're not going to let it run for further supplies. You're going to close it out here and you're going to expect another short confirmation because price will be somewhere around here. So right, it just created a pullback and price will be somewhere around here on the 4-hour chart. You will see this on the 4-hour chart, right? You are still prioritizing shorts over longs. Why? Because the trend is still bearish. And if the trend is bearish, you want to expect a reaction on every single 15-minute/4-hour supply area. So, there will be a 15-minute supply, there will be a 15-minute supply, there will be a 15-minute supply, and you can expect reactions and confirmations on every of these supplies. Because just because there's a 4-hour decision and just because there's a 4-hour extreme, it doesn't mean that price will always react on decision lows and extremes, right? It doesn't mean that the textbook trend will always happen. It doesn't mean that the 4-hour will always return to the 4-hour extreme and it will continue this perfect textbook trend. No, sometimes price will just react on the less recent 15-minute zone somewhere around here and it will continue the trend and break the 4-hour structural low point. You've seen several examples for this one, right? I'm asking you guys. You've seen several examples for this when price just simply reacting on the 15-minute zone instead of a 4-hour and it just simply continued the trend. Of course you did. And that's why you want to prioritize shorts over longs if the trend is bearish. So let me just close Discord because someone is messaging me. Okay, so that's why I want to prioritize shorts over longs because the trend remains bearish still. So here we are at this zone. Here we are this next recent 15-minute supply area. Let's just assume that price changes character here to the downside. Once again, your time frames are being lined up. Trend is bearish. 15-minute zone has been tapped. 1 minute has changed character. Once again, everything is bearish. You're expecting a bearish continuation. Okay, you're entering here. Perfect. Very nice entry here. Let's just imagine that you're getting swiped out. Or no, let's just imagine first that this trade hits your TP, right? This trade hits your TP. You're going to target this low point, for example. Perfect. You just made yourself a nice amount of profit once again because your plan worked out. That's how I create my forecast actually. So second option, you take an entry here, you take a stop loss, you take a break even, doesn't really matter, and price flips this supply area. After price is flipping this supply area, what can you do? The thing you can do here is to mark up the next recent 15-minute/5-minute region that flipped the zone, that flipped this supply. Wait for the confirmation here on this 15-minute/5-minute area. 1 minute confirmation and longs up to the next 4-hour decisional. Here will be the 4-hour decisional. You're going to take longs up to this region. You're taking longs up to this 4-hour decisional. And if this 4-hour decisional is getting mitigated, you're going to expect heavy shorts. I look for heavy shorts here. If it breaks, then longs up to the extreme, right? That's why I wrote it here. If this 4-hour decision is getting mitigated, you're going to expect a heavy reversal and you're going to force short trades. 50-minute change of character happens, 1-minute change of character, you're going to force short trades right here, and you're going to target this low point again, because all of this bullish order flow that has happened here will be just liquidity to target for the shorts, because the trend is still bearish, right? Trend is still bearish. You are still expecting bearish trades. This is what you can see on the 4-hour chart. This is what you are expecting on a 4-hour chart. Trend still bearish. So you're going to target this liquidity trend line right here. You're going to TP right here. Okay, clean. But what if it won't happen? What if price flips this area? Sorry. I just left out something. The first scenario, that what if price reacts here? Okay, this was the basic. What if price reacts here, right? So it mitigated the 4-hour demand. It reacts on this last recent supply, 50-minute supply. What if it creates a confirmation? You're going to prioritize shorts over longs. Why? Because this 4-hour zone wasn't strong enough to take out the less recent 50-minute zone. If a 50-minute zone is getting comfort, when price is coming from a 4-hour area, then more likely this 50-minute will be much stronger than this 4-hour area, and it will be broken. So if it confirms the less recent 50-minute zone, then we will target the low point, or we will target the break of this demand. Okay, I just left it out. I wanted to clarify this. So back to this region. So what happens if this 4-hour decision is getting flipped? Let's just imagine that it's getting flipped. Okay. Question to you. Listen here. Question to you. Will the trend change here if price breaks this 4-hour decisional? Exactly. The trend won't change. The trend still remains bearish, because this 4-hour decisional break won't change the trend. You can see that the 4-hour shifts here. Here is the 4-hour shift line. If this breaks, then the trend won't shift. Trend won't shift, yeah. But if this decisional breaks, it will mean that we will prioritize longs on the short term. If this decisional breaks, it means that we will prioritize long trades. We will prioritize these long trades on the short term. We are going to target the extreme right here. We are going to target the extreme with our long trades. Let's just imagine that here's a 50-minute zone / 4-hour zone. It's getting mitigated, being confirmed. You're entering here, and you're going to prioritize these long movements for a short period of time for this next recent extreme. You're going to TP here. And after this extreme is getting mitigated, you're going to expect the exact same heavy short reversals, as I wrote it down on the 4-hour decisional, as you expected on the 4-hour decisional. So you're going to expect a heavy reversal here. You're going to expect that price will create 50-minute change of character, 1-minute change of character, and all of this liquidity trend line that has been built up here will be swiped out. It will be swiped out, and you're going to expect here, this one. And you're going to enter here, target all of this liquidity, and you're going to book a really fucking nice risk-reward ratio. Why? Simply because trend, 4-hour, trend shift, extreme. If this happens, if all of this movement happens on the 50-minute chart, the order flow on the 50-minute chart, this order flow on the 50-minute chart will be bullish. So the order flow on the 50-minute chart will be bullish. It has never changed, right? The 50-minute order flow has never changed. Not even on here, not even here, not even here. Here has to change. Technically the 50-minute order flow never changed. It remained bullish over the past few hours or days, or I don't know how many days, hours does it take to create this movement. Doesn't really matter. But the 50-minute order flow remained bullish. Just because the 50-minute order flow remained bullish doesn't mean that we are not looking for short trades. We are still prioritizing shorts over longs, right? But the 50-minute order flow was bullish. Why we were looking for short trades? Because the trend on the 4-hour still bearish. That's why we are looking for short trades when this happens, because every single 50-minute, every single 4-hour supply has a chance to give a really fucking nice reversal And at that reversal, you can catch a really fucking nice opportunity, which will print you like 30, 40, 50 risk-reward ratio in one fucking trade. Imagine catching a short here, targeting this low point. That will be like 1 to 30, 1 to 40 risk-reward ratio in one trade. Of course, you took losses. You took losses before because you tried here, you tried here, you tried here. You took like 2, 3, 4 losses. Who the fuck cares? You're going to force and prioritize these shorts over and over and over again until the trend shifts. And you're going to take losses here. You're going to take losses on these good opportunities. But one opportunity will print you the desired risk-reward ratio because the trend is still bearish on the 4-hour time frame. And if at one time that good confirmation happens, when price can really confirm that area and really reverse, you will be in that trade because you forced every single trade right here and prioritized shorts over longs at every single area. And you're going to be here in this trade and you're going to book a really fucking huge risk-reward ratio, which will compensate you for all of the losses that you took here. Let me just read the chat quick. Okay, I will answer the questions after I finish this educational topic. So let me just quickly remove everything. And that's, guys, how you trade the trend combined with the order flow. And of course, the counter side is the same. If you're trading the bullish side, it will be the same, just, the counterword side. But that's how you trade based off of the trend combined with the order flow. Was it clear? If yes, please just type a Y or a yes in the chat. Everything's clear. Sorry, I just left out something. I just left out the one of the most important parts. That, okay, here's this first example. When price reaches this extreme, right? Price reaches the extreme. Let's just assume that it won't create this reversal to the downside. Instead of creating this reversal, it will just simply break the extreme. So the extreme breaks. What happens after? My question is, what if this extreme breaks? What do we do? What happens if this extreme breaks? Write it down in the chat. What happens when the break of this extreme happens? The trend change to bullish. Exactly. Trend bullish. Trend change. Trend changes. Trend change. Longs. Exactly. When this high breaks, the 4-hour order flow and trend will shift to bullish. And finally, we will prioritize longs over shorts on the long term. And if it happens, if price flips this area, breaks this area, shifts the trend to bullish, it will mark out the less recent 15 minutes / 4-hour zone. Let's just imagine that here's a 4-hour, here's a 15-minute. You will mark out these areas and you will expect a reaction on this 15-minute, you will expect a reaction on this 4-hour, and you're going to prioritize longs over shorts on the long term. And you're going to, for example, target double taps because here was double taps. Here was double taps. You're going to target these double taps. You're going to target higher liquid regions, or you're going to target structural high points for a really nice risk-reward ratio once again. And that's how you can approach the trend combined with the order flow. So next time you're seeing 50-minute zones, you're seeing 5-minute zones, you're seeing 4-hour zones, don't get confused. Don't get confused. Don't be scared. Approach these areas just like I showed you here, right? So you're going to identify the 4-hour trend, you're going to mark out 4-hour zones, you're going to mark out 50-minute zones, and you're going to approach and force that side of the market, which is the contouring side, which is the contouring trend side. So if 4-hour is bullish, you're going to mark out every single 4-hour area, every single 50-minute supply area, and you're going to prioritize those areas over the demand areas, right? If the counterword happens, so if the trend is bullish, you're going to mark out every single 4-hour demand, 50-minute demand, and you're going to prioritize those 4-hour and 50-minute demands over the supplies until the shift happens, or until this order flow shift happens, or until anything that I showed you here happens, right? Just because the trend is bearish right here, doesn't mean that you can't take bullish trades. Just as I showed you, you can take these bullish trades. When a flip happens here, when a change of character happens here, you can take these bullish trades, but you have to know what should you target. You should target the next 15-minute zone when this happens, when this third example happens. When the second supply breaks, you should target the next decisional. When the 4-hour decisional breaks, you should target the extreme. You should know what you have to and want to target. Just because the 4-hour trend is bearish doesn't mean that you can't take bullish trades. Please, guys, after this session ends, I will upload this video to the Discord group. Just watch it several times and take notes. Grab a piece of paper or a, I don't know, textbook. Grab a piece of paper, a textbook, grab a pen, and take notes. Write down every single scenario that I showed you here. Write down every fucking single scenario that I showed you here. Take notes, draw lines, take more notes, memorize them. Read them every single day and memorize them, because this is a really fucking important part. This is how you can trade the order flow and actually execute the highest probability setups. Of course, you have to combine this knowledge, this fucking knowledge. You have to combine this with the criteria tracker. You have to combine this with all of the other concepts. You have to combine it with your plan, the criteria tracker, the liquidity concepts, the blah, 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 every fucking single concept. But this is really fucking important. And I want you to really memorize this. Take notes, write it down, take more notes, write it down, read, memorize, practice, memorize, practice. I want you to do this. So once again, last question about this. After I ask this question, I'm going to answer your questions. Was this understandable? Everything is understandable for you? Come on, guys, spam the chat. If it was understandable, just spam the chat with Y's, yeses. Please give me some feedback about, was it understandable? Wasn't, blah, blah, blah. Come on. All right, I'm going to stop the recording here, and after that I will start a new recording.